Hey, good morning. Chase here at EVERBULLISH, the stock Sherpa on YouTube, the YouTube portfolio manager. It is Tuesday and it is May the 4th. May the 4th be with you. I don't know if you could hear that music or not. I'm getting a lot of comments about the volume and the sound quality, so hopefully it's good. I don't want to blast your ears out, especially just for a silly song. But I do want to keep the theme up because not only is it a trade Tuesday, a turnaround Tuesday, a bullish, ever bullish Tuesday here at the lake, it is also May the 4th be with you. So I woke up early this morning and for Star Wars Day and looked for all my Star Wars t-shirts that you can get for like $5 at Target that I had from college. And I couldn't find any, and they probably wouldn't fit anyway if we're being honest. But still repping that Star Wars theme on my YouTube video here. So that's cool. Today's Star Wars Day. If you run into anybody and you get the chance at the bank or writing a check or writing down the date, go ahead and make a pun about that or make a joke about that so I don't feel so stupid. My buddy Duffy, a good friend of mine and good mentor in the business, taught me about Star Wars Day like 10 years ago. So any of your cinephile friends or big movie buffs, they'll know it. That's enough about Star Wars Day. Thought that was kind of cool. So instead, I'm repping the Willie Nelson Have a Willie Nice Day shirt, Longhorn colors. Today's going to be a great video. At least I hope that is. I want to make a video about Labu. It's a trade that I publicize probably as much, if not more, than most other trades, any trade. It's basically been printing me money for a lot of this year, yeah, especially when there's not a lot to trade in the market, when we're bouncing off new highs and all-time highs. So I want to explain what it is first, kind of what the theory behind it is, use a little technical analysis, and just explain how this works. If you guys are following, some people are like, oh man, I made a bunch of money on that, and other people are like, oh, I really hope it goes up. So I get that timing is a baffling thing, but that's why we want to be in the right sectors at the right time. So let's get to it. I'm going to go down here. You guys know that I use Fidelity for my trading. So I'm using the Fidelity website. And I also have Yahoo Finance as a backup. I like Yahoo Finance just because it'll give me the updated quotes. I think it updates every 15 seconds or something like that. I also have Stockmaster rolling right now, but I'm recording on the same device, so I can't really do that. All right, enough about me. So this is called the Spider S&P Biotech. It's the subsector of the healthcare sector. So think of all the stocks in the market, and this is a U.S. based. There are a couple, but almost none international companies in here, just because it's a subsector. So it's considered small to mid cap. We have all the stocks that are traded in the S&P, or not even just the S&P, but all the markets. And then we go, all right, let's cut that down. Let's get straight to the companies that are in the healthcare sector. There are 11 sectors in the S&P. Fun fact, there used to be 12. They merged communications with technology, and now they call it information technology. A lot of traders don't know that. Even a lot of portfolio managers kind of are agnostic to that. But I think it's a cool little fun fact. And sometimes you just go, oh, well, why the heck is this company in the communications or the IT sector? Well, it's because maybe it used to be a phone company. It's just something cool to know. All right, enough showing off. Here we are. We've got the Spider S&P Biotech. Like I said, this is the drilled down version of all the stocks that are traded just to the ones that are in biotechnology space. I think you get that. XBI is the one time. So that means that it is not levered. This is just an equal weight, a market weight index of all the biotech companies really that are out there. The expense ratio is minimal, and really that doesn't matter at all anyway, because you couldn't buy all of these in the prices that they're at. So you have to use an ETF. So here's what I want to show. I think this is really cool. If you use Fidelity, Active Trader Pro is great, but I also just like the regular setting. I'm just going to stream it here. I'm going to show you what I look at and what I think about why this is a simple trade. Rule number 3, EVERBULLISH rule number 3, the Sherpa stock trade tips. Tip of the day is let it be easy. Let it be an easy trade. Don't overthink this. Real simple. So right now we're just looking at the non-levered version. We haven't even talked about Labu yet. But we're going to click on advanced chart here. I'm going to blow this up for you guys. So we have XBI behind me. This goes back 1 year. Yeah, so this is May of last year, May 3rd of last year. And then this is the candlesticks. So over that period of time, let's see what she's up. I'm going to compare this to the NASDAQ. When I throw the NASDAQ on here, it'll show you kind of where the correlations are and where they're not. So remember, NASDAQ bounced off of all-time highs twice last week, 3 times the week before. Well, what does that mean? Well, that means that most companies are kicking ass, right? Biotech has been lagging, and it's a laggard. And I've had a lot of people ask me if I just buy laggards. Absolutely not. I buy companies that I like first. But I do take note of laggards. And laggards, you know, typically are either something systemic or a disconnect between the market and efficiency. And that's where we make our profits. So I am going to zoom in, and hopefully you guys can see this. I think this might be a really good way to start showing y'all some more technical analysis. But what we're looking at here is April. The biotech sector, it actually finished down. If you look at the last trading day, we got 3 downward candlesticks right here. All right, so we see, all right, it moved down, it moved down. Well, what was it last month? Well, it was at like 58 last month. Well, and now it's at 48. Okay, well, what happened to the broader market over the same period of time? The broader market was actually the exact opposite. This is called a negative correlation. This is called a divergence. When they come together, that's called a convergence. I'm going to do a video about MACD when I hit 1,000 subscribers. MACD is one of the leading indicators that I use to trade. But that's neither here nor there for this conversation. Let's go back. Okay, so we're in May. We see a huge convergence. What's going on? Why is that? Let's go back to the last time there was a big convergence. You know, we don't always use history as an indicator of current performance or current expectations, but it's not a bad way to start, right? That's how we form our hypothesis almost. Let's think about it like the scientific method. So when we go back to September, September of last year, that was a good guess. Go back to September of last year was the last time that there was a big convergence like that. And also we have 1, 2, 3 downward days. We also have 1, 2, 3, 4, 5 downward days. But we also have the NASDAQ just went on a sick bull run. And then we went bearish on the candlesticks here. So that just tells me, look, last time there was a disconnect like this, what happened next? So if we move forward here, let's just look at the candlesticks and not at the blue chart. We went from up 10% over looking back 1 year to up 80% looking back 1 year. I'm not going to say that's going to happen again, but that's pretty, I think that's pretty objective. And remember that this is the non-levered version. This is just XBI. I don't trade XBI because it doesn't have enough juice. It doesn't have enough gas. It doesn't have enough vroom, you know? I'm trying to wake myself up here because I felt like I lulled y'all to sleep by doing some technical analysis. But straight up, that's where it's at. The technical analysis is after top down. That's the second thing I look at to trade. My phone is telling me it's about to die, so pardon my hand in your face. All right, we're here. So now let's throw, so we got XBI, let's throw up. We've got the blue line, which is the NASDAQ. Let's throw up, click on compare. We're gonna type in LabU. All LabU is, they use derivatives on a daily basis on the rolling expiring options. Don't have to get into that. I'll do another video about that, the way these work. But mechanically, just think about it like this is gonna give you roughly 3% of the upside and maybe 3.1% of the downside on a daily. To get 3 times levered, I'm happy to pay that juice, right? It's kind of like hitting a parlay if you're a gambler. Not that I am. Okay, let's throw LabU up there. Boom. Let's see what she looks like. Oh, I got an egg on my face all of a sudden. Uncompare, compare. There we are. All right, so LabU is going to be LabU is this blue line here. See this blue line in the back? when compared down here to this, the candlesticks and also the NASDAQ, kind of the same thing happens here. I'm gonna see if I can switch it real quick. I didn't expect this, but I wanted to make this video authentic for you guys, so bear with me. Yeah, for whatever reason, when I'm doing the streaming, it kind of changes up the look and takes a hot second. So anyway, what else is up? Oh, I know what's up. I didn't even expect this. EVERBULLISH shirts are back, baby. So I got a restock. I've got the black Louis Vuitton knockoff with the Tesla logo inside of the pattern. And then I've also got the red ones with the white background, obviously. So I've got those in large and extra large. They run small. They make you look buff if you're buff. They make you look fat if you're not. And then on the back, they have a really cool, they have this logo, the EVERBULLISH logo. So if you want to support me, support the channel, or just support your love for electric vehicles or Tesla, go ahead and buy that. If you want to buy it because it looks like an LV shirt, don't buy it. All right, here we are. So anyway, now we've got it rocking. The amount of leverage that you get is the difference between the candlesticks in the background and these lines here. This is on a grand scale over 1 year. And this is where we are right now. We're at 140%. I'm sorry, 124%. Let me zoom that back in for you. Yeah, there we are. So yeah, 124% over 1 year. This is not good at all. Not when we think about the fact that it used to be in February of this year, it was up over 400%. That's why I trade these things straight up. That's how you get the juice. The difference in the amount of time decay would be, why is the 100 and the 400, why is it 124% and 400? Well, because all of these have to use options inside of them, and there's an erosion of time decay. A lot of every advisor you ever get will tell you not to use levered, because they don't get paid on it. They don't get paid on leveraged securities for the most part. So that's why they tell you not to do it. The other reason they tell you not to do it is that you can lose money in these things. You can absolutely lose money, but if you can lose money in anything, and it's very unlikely you're going to lose 50%. But even if you did, let's say you lost half your money. Well, for the opportunity to get a normal correction rebound of over 400%, I'm down. The casual way to say it is just that, straight up. That's why I use Labu. I also love the fund company. It's called Direction with an X. But there's one of these, like I said, the other trade that I've been doing is ERX, and that is on the XLE, which is the spider of the energy index, right? So it's just 2 levels down. My buddy Joe was asking about that, and I kind of just said it's kind of like the cousin of buying a big oil company, but also getting, it's very similar, but also they have some characteristics, but they also have some differences. So they're not brothers, they're cousins. I don't know if that went through, but I do live in Canyon Lake, Texas, so I got to make everything a family joke. I'll stop there before I say something I shouldn't. What else should you know about Labu? I'm going to click on research up here in the corner. There's so many tabs open here. All right, let's go back here. All right, so Labu. Yeah, 1 year, 250% returns. The biotech industry was at 75. Huh, that's weird. What's 75 times 3? 5 year, 23.5%. Biotech was 21%. So a lot of, again, people tell you, oh, dude, never buy, ever buy doubles or triples. We're talking about, let's call it, if the risk quotient was 1, if the beta was 1, the beta on this is 3, but the downside on it is, what they call that R squared. The R squared is probably 1.2. All right, I'll lose 1.2 on the downside, but I get twice the return. Twice the return on a daily on the upside. I'm cool with that. So I know I'm beating at home, but I think it's important because it's a lot of little tips and tricks like this. Your advisor's not telling you, again, they don't get paid on these 3 times because they're considered short-term investment instruments. And also, this is one way to stick it back to the big banks because they have to create and redeem shares all the time to do this. And when they do that, they really don't make very much. They only get paid on the order entry for being able to provide liquidity in these biotechs that they then send off to the hedgies. So you're not hurting anybody when you do this. I like that part too. Man, I thought this was gonna be a longer video. I'm really just gonna leave it at that. I hope this was a good takeaway. I know the energy was a little bit low today. Please bear with me. It's, you know, it's still 7 in the morning, so I love all the followers. I love all the likes. I love all the subscribes. I hope this was good information. And please visit everbullish.com if you'd like to join my free newsletter. I give you tips and tricks like this all the time. This is all 100% free. I do sell 3 portfolios that are great for IRAs, also great for people starting trading. And then you follow my YouTube channel, and I talk about all of these stocks and get you up to date on this, on what's going on. And then anytime there's an economic shock or every quarter, I will rebalance it and basically manage it like a real portfolio, and you can choose to follow or not. So if you like my ideas, you can continue. If you don't like them, you can, you know, take it for what it's worth. There's 75 bucks. The Ever Bullish one is my flagship portfolio. I'm very proud of its performance. On the 15th of this month, I will be able to give results of the year to date, the 1 month, the year over year, and all that stuff. You can also backtest anything I ever talk about or anything your advisor tells you or anything on a really cool website. They don't pay me, but I like to tell you about this, and they don't want you to know about it. It's called portfoliovisualizer.com. You get 3 free attempts before you pay. And as long as you don't save them, you can use it anytime. So you get to save 2 portfolios and then you continue to use it forever. They're a great, really cool company, great resource for traders like you. Anyway, back to promoting me. Chase EverBullish, everbullish.com, the EverBullish 1 portfolio, the EverBullish dividend portfolio, the EverBullish balance portfolio. I'm going to say EverBullish again because I have the EverBullish 1 podcast. I am super bullish today. I hope you are too. Remember, it's Star Wars Day, so let's skyrocket. Let's go. Let's take this to the house, baby. Feel free to buy some merch if you want to support, and hopefully you learned something. Love you guys. See you next time. I'm out. LGF, LFG, AFG. Let's get rich. LGR.